welcome to the channel. This is the Geordie Pig Investor, and this is my first ever video that I'm making on my channel. So a little bit about myself. I'm 23 years old. I started investing about 6 months ago, and I decided to make this channel because I think there's some good content out there. There's some great content creators, especially in the UK at the minute, which is awesome to see, but there is also a lot of absolute rubbish out there, and people who, sell fake promises and try to make out that things are a lot better than what they actually probably are, buying stocks and then selling out of positions that are in a negative and keeping the ones that are positive and making it out that they are, these financial gurus who can make you 30% gains every single year. Cryptocurrency as well as penny stocks are always, gathering a lot of attention, and I much prefer the realism and would like to bring that to this channel. So yeah, I'm just going to go through my trading 212 portfolio today. Started this, like I say, 6 months ago. I started with an initial £600 investment, and I had a little bit in my savings, which I had already built up my emergency fund, so that is set up and I've got that right now. And then I had some money in my savings on top of that, which I decided to start investing after I'd had done a good amount of research. So this is my current portfolio. You can see it grew from £600. I was trying to invest around about £200 to £400 per week to start with, and luckily I'm in a fortunate position where I actually work in the leisure industry. So I work across gyms and leisure facilities for my main source of income, my full-time job, but I actually work an additional job for the NHS, and in my NHS job that money that I bring in usually funds my portfolios. So that's what I've been able to put into this, and you can see my returns as I started was £600. My returns were around about 1% at the start. I went into a little bit of a negative, very, very small amount after a couple of months of investing. And then from there, I've never seen red again. It's just been sort of an upward trend, which is thanks to the S&P 500 performing so well, and the sort of individual stocks I've picked out have not done too badly in the short amount of time I have had them. So a little bit about me as well is I am more of a dividend-focused investor. I do like ETFs for the safety aspect, and to have a good chunk of money in there. You really can't beat the sort of 6 to 8% returns that you're likely to get every year across a 20-year period. So I'm very much happy to put some or a lot of money into there, and I like the dollar cost average into that. So I'll put £100 a week in there, and then the rest of my money I like to allocate across to my single stocks, which are UK and US based for the majority of them. Okay, so yeah, so what I'm going to do now is just go into the stocks and show you my different pies. So on Trading 212, there's a nice feature to set up different pies. So I have actually set up 3 different pies, well, 3 main ones, and then there's one little one at the bottom. This one here is a weekly investment that I decided at the start of January. So I'm putting £30, which is just over 1 share of Diageo, into this pie every single week, so that by the end of the year I'll have 52 shares of Diageo. I've got a lot of good reasoning behind picking Diageo. Main one being undervalued, and I believe it is going to have a little bit of a rally. You can see it's actually up already 7% since the start of the year, which is a great return considering I haven't had it that long. So that's really nice to see. But yeah, so we'll get on to my main pies. This video, like I say, is just more of an introduction, so I don't want it to take too long. So I'm just going to go through all my holdings, and then in later videos, as I'm going to try and do monthly updates. I will sort of go in a little bit more depth about what I've decided to invest into for that month and my reasoning behind it. Okay, so my first pie chart here is my ETF pie. So you can see this has had the best returns at over 8%. You can see the S&P 500 and the NASDAQ 100 have both had basically the same returns. I have a lot more weighting in the S&P just because I'm a little bit more confident in that and it not being quite as volatile as the NASDAQ 100 is. But yeah, both return around about 8.8%. And then the FTSE All World as well, I quite like that as a core holding. So it's got a lot of overlap with the S&P 500, but it is actually returning just under 7.5%. Okay, so that's my 3 ETFs. I also have an account on Invest Engine where I do invest into ETFs over there, but they are slightly different ETFs. It's something called factor ETFs, which I am a big fan of. So I'll probably have separate YouTube videos going into my Invest Engine account and the reasoning behind the investments there. I currently only have £500 in there, as like I say, I only started investing 6 months ago, so I've not got infinite money, unfortunately, to be investing across all these accounts. And with this being my ISA account, so this is actually tax-free. I like to get the majority of my money into here. Although from April, there is going to be a new rule put in place where you don't have to have one sole ISA account per year. You can actually have multiple, which is going to be really nice, because then that means that I can actually open up my Invest Engine account as an ISA and hopefully move all my factor ETFs across into there, and then that means that will also become tax-free forever. So that'll be really, really nice on top of here. As unfortunately, I'll not be able to max out the 20,000 amount per year in these accounts, as I am also a homeowner. So I have got a mortgage to pay for, and I live on my own, so I've got all my bills and everything else to pay for on top of my investments. Although I do wish I could invest 20,000 a month. A month, that would be amazing. 20,000 a year, that is. But unfortunately, not quite in a position to do that right now. Although I am, this year I'm looking on target for the 6 months that I've done it. I should hit around about £12,000 invested for this year by April, and I'm hoping to do another 12,000 next year, which is roughly about £1,000 a month. I feel that is sort of realistic for myself and the amount I'm working. I do work 60-hour weeks for most weeks of the year, so that is how I do have this extra disposable income. So I do work very, very hard for this money, because I believe I'd rather work harder now while I'm young and fresh and able to get the hours in, and let that money compound over time and have that snowball effect, especially with me being a dividend investor, or majority focused on the dividend investments. I like the growth stocks, obviously, for the long term, because I'm so young, so I'm more interested in the ones that are sort of yielding over the 3%, so it's beating that inflation rate, the average inflation rate, although, as I say, that inflation at the minute is rather high. I think it's on course for being around about 4% at the minute, so it is still on a little bit of the high side, but hopefully that should even out over the next few years, and we should have a level in a few years where it's actually below the average 3%. So in my UK growth dividend stock portfolio, I've got mainly growth stocks in here, and then a couple of high dividend yielding stocks as well. The likes of Legal & General is quite a popular one. I bought in at a quite nice price there. BATS is exactly the same. I feel like it's at a very good price, so that's why the amounts are where they are. My percentages in each of the positions isn't going to be a reflection of what they are long term. It's like I said, I've only had it 6 months, so my allocation to certain positions is just because I've found a nice position in there and I believe that they are undervalued. So that is where I will invest into single stocks now. It is more due to the value rather than the quality of the stocks, although I want stocks that are of a high quality and at a good value. That's the two major boxes that I'm trying to tick. I'm very, very happy with my holdings at the minute, actually. I've got 18 holdings in this one and 13 in my US one, so around about the 31 holdings. It's on the little bit of the high side. I would quite like to have 25 or so individual stocks, but for now I'm happy to hold on to these and just pretty much add to these positions and not have any new ones created. So this one here, you can see Legal & General, British American Tobacco, we've got BAE Systems, GSK, AstraZeneca, Rio Tinto, National Grid, Diageo's in here as well. So I've got quite a lot of Diageo actually at the minute, with that challenge going on alongside. But I do believe it's at such a great price for the company that it is, and what it has to offer, and how consistent it is with its dividend payments. So you can sort of see all the different positions I have in here. Some of the positions have been freshly opened. For example, GSK was only opened a couple of weeks ago because I closed down a couple of other positions, so I had a little bit extra capital, and I decided I liked the price of it, and I decided to put it all in there. So far it's up about 1.5%, but you can see overall we're up about £90 in this portfolio, which is just over 2.5%. My US growth dividend stocks, I actually have £1,000 less in here. The intention was that for them to be similar, but like I say, I don't predict what has or what I feel is good value, so it just sort of depends where the value lies. And also with tax being at 20% on any US dividend that you are paid, because I'm a UK resident, that does hinder the amount that I sort of want to allocate into the US stocks. So if I find similar value across in the UK side, I would prefer to put my money in there. But you can see here I do still have 2,500, and it is also up the same amount as the UK stocks, up at £90. I have massively been investing in Vici Properties and Realty Income in the last couple of weeks, because I feel especially Vici Properties is a phenomenal price, being under the $30 mark. So I'm just sort of adding into that every single week. And again, like I say, don't take notice of the allocations, because these will level out over the next couple of years. I will, make the likes of Waste Management, Chevron's quite a reliable dividend payer and one that I'd probably like to have a bigger position of. MasterCard especially, I've only just opened this position, so I want that to be allocated a lot of higher percentage. Visa probably above 8, more towards the 10%, Apple towards the 10%, and Microsoft as well would be great to have up at 10%, but it's at such a high price at the moment. It's over $400, and to be honest, my sort of buy price there would be closer to the 370 mark. So it's quite a way off, and I'm not sure it'll actually ever creep back down there. Will I regret that in the future? Maybe, but it's one of those where I'm not too happy to add too much right now, so I am not going to force that position. So yeah, so this is all my stocks and within these two portfolios, and like I say, I've got a little bit extra Diageo here, which I'm doing as a weekly challenge. So that's comes out to a total of £9,735 is the total value, and I've invested myself just under £9,300, which I think is pretty good going, like I say, for it being only 6 months, with my returns just under 5%, which again I'm really happy with. To be honest, I'm not hugely bothered about the returns. If that was in the red, I just keep putting the money in. I quite like it when it's in the red, and that's where I'm buying a lot of my stocks, when I like them down in price, because I believe they're on a discount. And if you were anywhere else, you would love to have discounted products such as your mobile phone, some clothes. Everyone loves and raves about a 15 to 20% discount. So what's the difference with stocks? It's the same sort of thing. Get yourself a discount when the stock's at a reduced price. Obviously, you've got that little bit more risk involved where it could continue to go down. But in my opinion, if you're confident in that stock, you've done your research, then it's about continuing to add to that capital and add to that position. And like I say, with me being a dividend investor, my goal is to, over the next 20, 30 years, have enough dividend income coming in so that it covers the majority of my bills, and I can be work optional. I don't think I would like to retire in my 50s, but I think I would love to be work optional, where I get to actually choose the work I do and not have to work too many hours. So that would be a lovely position to be in. I am, sort of taking my finances into my own hands and doing this. So yeah, so my reasoning behind the channel is, like I say, I just really want to document everything on here. I also started off over on a Twitter page on X, and it was going really well, so that's sort of why I've decided to move across onto YouTube and try it over here, as I like to document this and showcase it with everyone else. Thanks for watching so much, guys. I really appreciate you checking out the channel. I'm going to have a lot more videos coming up, portfolio updates on here, on my Invest Engine, stock analysis, loads of different types of videos. So if you have any ideas, just let me know in the comments down below, and I'll be happy to answer your questions. Thank you again for watching, and this is the Geordie Pig Investor out.